Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. What do we got going on with the markets? Well, so far they're not willing to let the markets come down. Now, how do I know this? Well, they're doing it with what I would call yield curve control. This is just my opinion. The Fed is buying the long end so that they can push the long end rates lower, right? Which will keep the stock market going up. They're also buying the junk bonds. Junk bonds are being bought right now. Now, I don't think you're buying them, and I know I'm not buying them. So my take is that the Federal Reserve is in there buying the junk bonds and doing yield curve control to continue to prop up the market. And they're probably going to push this up higher, 6,300, 6,400 on the S&P. That's just my take. Now, eventually, this is going to come crumbling down in what I would call the crash of our lifetime. Now, maybe we go sideways for a while first before we get that crash, but I do think we're going to get the crash of our lifetime. Why? Why do I think that? Because this whole rally has pretty much been artificial, right? It's the biggest artificial bubble in the history of the world. Now, the moon boys would tell you this is perfectly normal behavior for the stock market. Right now, I say the stock market's been going up for 16 straight years without a bear market. Now, technically, okay, someone brought this up in the comments. Technically, in 2020, right, during the pandemic, we had the crash. We're down about 30%. And that lasted about a week, maybe 2 weeks before they came in and bought it back up. Now, was that the shortest bear market in history? By technical definition, yes, that was the shortest bear market in history, right? Anything over 20% they say is a bear market, but technically that's not true. Now, in 2022, we came down 22, 23%, which would technically qualify as a bear market also, but it got bought right back up again, and it didn't even break the channel. There's a channel going upwards, right? It didn't even break the bottom channel. So technically, yes, there's been what they would say bear markets. If you want to go with the technical definition, my definition is no, we have not had a bear market. And when we have a bear market, you will know it's a bear market. Those were technical, and they did come down more than 20%. So technically bear markets, but no, I say we've had a 16-year bull run. Just my take. You want to say we had two bear markets in that bull run, that's your take, then that's fine. Nothing wrong with that. Okay. Now, I do think we're going to get a bear market. I think the bear market is coming within the next 6 months. We're going to be ushering in a new bear market where you're going to feel it, where you're going to know it's a bear market, and it could be the crash of our lifetime. We'll see if it's the big one or not. The big one will happen in the debt market, the debt market being bonds and stuff. Okay, so one other comment, this was from Mary Gillette in the comments. Anyway, she asked if it's a safe place to have your money in T-bonds. Now, I got nothing against T-bonds on the shorter end, right? 2 month, 3 month, those would technically be T-bills. But if you're looking at 10, 20, 30-year bonds, no, that is not a safe place for your money. I was having the same conversation yesterday with a friend of mine. He's retired now, right? We're at the retirement age. And so he was on the 60-40 in the stocks versus bonds, and he's putting more into the bond side of it. And I told him I didn't think that was a very good idea. And I tried to explain this to him as I'm going to try to explain to you. It didn't really sit too well with him. We'll see how you think about it. Well, anyway, so they're paying you, let's just call it about 4% on the 10-year bond. I'm using rough numbers. Maybe you'll get up to 5%, but let's go with 4%, right? And they're telling you that inflation's at 3%, right? So they're paying you 4%, but inflation's eating 3%. So you got 1% of real return on your money for having it in the bond market, right? Now, I'd tell you, I would argue that, yes, they're going to give you 4%. And over 10 years, they're going to continue to pay you the 4% on those 10-year bonds, right? Okay, so you're locked in at that 4% rate. But I would argue that even right now, that inflation is running above 8%, probably closer to 10%. Now, I don't know about you, but the stuff that I buy still going up, still going higher. It's not coming down. My insurance on my house, they're talking 20, 30% increase. Food prices still going up. It's really getting a little scary when I go to the store. You know, I talk about buying gold here, and there's a lot of people going, but Mike, Mike, I can't even afford to buy eggs. And I get that. Eggs are expensive, right? I think I paid $1 an egg the last time I bought eggs. It's crazy out there, right? But okay, so if you're getting 4% and inflation's really, we'll just use round number, 8%, I think it's closer to 10. We'll go with 8%. You're losing 4% of purchasing power every year. Now, you bought the 10-year bond. Over the 10 years, you're going to lose 40%. Almost half of your money is going to be wiped out, right? Half of your purchasing power. Now, is that a good place to have your money? Well, I'd say no. Now, I was trying to tell my friend that for the last 25 years, the gold market, if you bought gold instead of bonds, you would have doubled your rate of return over the last 25 years. The bonds about 4% and gold about 9%, so a little better than double, right? And that's with no counterparty risk. Gold, you own it, it's physical, you hold it, and but he's saying, but Mike, I can't buy gold now, it's at a record high. That's correct, went up 40% in the last 12 months. 40%, already up 9% just this year. Now, I am expecting a little bit of a pullback. You see, in the gold market, we've gone up, gone up, gone up. We're at record highs. And we're going to probably get a little bit of a pullback. And that's going to be where the buying opportunity is. Now, maybe it comes down to 2,700, 2,600. Well, we sit about, I don't know, about 2,850 right now. Maybe we get that pullback, and that's the opportunity. But even at 2,850, even at 3,000, gold is incredibly, incredibly cheap. Incredibly cheap. And silver ridiculously cheap. Those are two of the cheapest assets on the planet. Yes, gold's at a record high, but still cheap. And you can measure it against the stock market. Stock market's at record highs, but extremely, extremely expensive. Gold record high, extremely, extremely cheap. But nobody's going to believe that. My friend, he was rolling his eyes, like Mike's talking crazy stuff. That's just unbelievable. But look at the bonds are not where you want to be right now. Very risky. Yes, look at short-term T-bills, 2 months, 3 months, that's just like cash, right? You can wait 2 or 3 months to get your money back and you get a little bit of interest. That's a good thing. But my friend, he was saying, but Mike, we're not going to have inflation anymore. We got the Doge boys in there. The Doge boys are going to solve this problem. Look, let's talk a little bit about the Doge boys, right? Okay, so they're going to correct this inflation problem. They're going to cut government spending. And so far, they've been cutting about $1 billion a day in expenditures. And I'm in favor of that. That's great, right? So if they do that for the year, let's see, $1 billion a day. Let's say they work 7 days a week. They work weekends. $365 billion gets shaved off of it. Look, we're printing 2 or 3 trillion over it. So the goal for the Doge boys is $1 to $2 trillion in cuts. Never going to happen. There's nowhere to cut it from. Look, they can't touch Social Security, can't touch Medicare, probably not going to touch defense. There's not enough. If they cut everything else out, still not enough. Doesn't get you to the $2 trillion that their goal is to cut out of the deficit, out of the spending, so that we can have, not the big deficits that we've been having. But here's the problem. Let's say they do. Let's say they get lucky and they cut $1 trillion out. Or even let's say they get a miracle and they get $2 trillion in cuts, right? Okay, so the GDP has been growing at 3%. Why has it been growing at 3%? Because we overprint money every year. 2 or 3 trillion extra dollars every single year that we don't have. We print that amount, right? Extra. And that goes into the economy, and that makes the GDP grow 2-3%. You take out $2 trillion, you put us right into a recession, going right into a depression just by taking out the money, right? What about unemployment? Well, you're going to get rid of all those departments. They say unemployment's running about 4%. You cut $2 trillion, you're axing a lot of jobs. And don't get me wrong, I'm in favor of that. In the long term, that's going to be a good thing. In the short term, you're going to raise unemployment, right? I say unemployment's already about 10%. They got the number at 4%, but you're going to push that number, I say you're going to push that up to 20% if you cut $2 trillion out of the budget, out of the spending, right? Because you're going to be laying off all those people, and those people go out and spend money in the economy. They're not going to be able to do that anymore, so you're going to get more more and more layoffs. You're going to send their number of 4% up to 10%. You're going to send my number of 10% up to 20%, right? Okay, so it's just not going to work out that way. Now, will the inflation number come down? No. Now, here's why. Okay, you had this guy back in the 80s, right? Paul Volcker. Okay, so he was the guy that came in, raised interest rates to get rid of inflation. Ronald Reagan said, raise them up. We got to get rid of the inflation, right? Okay, so he raised it at what? 18%. 18%. Where did we raise the rates to? 4, maybe 5%, right? 5%. Look at inflation's running 8 to 10%. You would have to raise rates up to 10, 12, 14% to get rid of inflation. You're not going to get rid of inflation. Inflation is not going away until somebody has the guts to let the rates go up, and they don't have the guts. Why? Because the government's insolvent, right? Cannot pay its own debt, cannot pay the interest on the debt. You get rates at 10, 14%, it's all over. Everything comes crashing down. So this is a problem, right? Yeah, maybe the Doge boys come in and they save us a little bit of money, right? $1 billion a day they're cutting out of the budget. And I think that's great. I'm in favor of it. I want a smaller government. But at the same time, they're getting this sovereign wealth fund, right? We're going to buy TikTok. We're going to buy Bitcoin. We're going to get a sovereign wealth fund, right? And the stupidest idea I've ever heard the government talking about, right? Sell all the gold and buy the Bitcoin. You know why they're talking about that? Because they don't have the gold. There is no gold. They say we have 8,000 tons of gold. That is gone. If it wasn't gone, they would do an audit. The Donald, he could walk into Fort Knox and he could count. If he needs someone to help him count, I volunteer. I'll go in with the Donald. We'll see how much gold there is. There's no gold. So their plan is to say they sold the gold and bought Bitcoin. They're going to buy Bitcoin. They're going to print money that we don't have and buy it. And then they say, oh, the gold's gone. We sold it to buy the Bitcoin. And then they don't have to explain why we don't have 8,000 tons of gold. Now, when the reset happens, I'm worried about China. China, they know what they got. They got 25,000 tons of gold. We're supposed to have 8,000 tons that we do not have. We're in big trouble when the reset comes. Shh, can't say that on YouTube. They don't like that. They take away my subscribers. But that's a fact. We do not have that gold. Somebody get in there and audit. Look at the government works for us, the people. Somebody go into Fort Knox, open up the door, and start counting the bars. See how much gold we have. We don't have 8,000 tons. As the people who believe in real sound money, we have a right to know how much gold we're holding in Fort Knox. I think we do. I think the government works for us, but they can't tell us because it's already been stolen. Stolen by who? Stolen by the government. They sold it to somebody and they spent the money. I'm telling you, this is just my take. It's call me the tinfoil hat guy, but it's what I believe. If I had the gold, why not just go audit it and make everybody happy? Go, yeah, we got 8,300 tons. That would be great, right? Because then we got something to work with. Then we know how much we have to offset our debt with and what we got, real money, sound money, but they want that Bitcoin thing. They want you in Bitcoin. Why? Why they want you in Bitcoin? Because if you get Bitcoin, you need the stable coins. And the stable coins, what are they doing? They're buying all the bonds. They're trying to do the bond buying for them, right? They got no one else to buy our bonds. No one wants our bonds, especially the 10-year, the 20-year, the 30-year. You don't want them. I don't want them. Look, it's a bad idea. Now, my friend, he wants me, thinks bonds are a good idea. I try to convince him. I try to convince him no. And the other thing we talk about when you get to my age, you talk about Social Security. He goes, well, I'm going to be fine. I get my Social Security. Well, Social Security is just like the bonds, right? Okay, you see, I say inflation's going to eat away the Social Security. He goes, no, they do that COLA adjustment or whatever it's called to make your Social Security go up to compensate for the inflation. Look, they're calling inflation at 3%. You're running at 8%. That's 5% a year. You're going to live another 10 years. Your purchasing power of your Social Security check is going to be chopped in half, and it's going to be ugly. We have a retirement crisis in this country. We have a big problem, and the problem's going to smack us right in the face, and it's getting really close to that time. So prepare yourself. Get a little real money. Get a little gold, a little silver. Silver, the cheapest asset on the planet. 30, 32 bucks now, keeps going up, creeping up, creeping up. It's going to take off soon. So you want to have some. Maybe I'm all wrong. Maybe it goes back to $20, $10, $5. I don't think so. That's what a lot of people are telling me it's going. I don't buy that, right? I don't buy into that. I'd stack silver. I'm a silver stacker. Love the shiny metal. Anyways, I'm Tall Mike. You like this stuff? Give me a thumbs up. Punch the subscribe button. Get out there, everybody. We made it to the weekend. Enjoy the weekend. Bye-bye now.